Okay, hello, profit seekers and lovers of capitalism. I am your growth stock guru, Rick Action Jackson, coming at you. It's Thursday morning, June 18th, and we've got Rick's 3 picks for you today. All 3 of these companies are either a buy or sell under my discipline, the top quintile discipline. These 3 are all buys. Let me first remind you that this is not financial advice. Financial advice involves your personal circumstances, your ability to save money, your ability to access money. That's why you should have a financial advisor. The best thing a financial advisor does it keeps the risks to a minimum. And you should consult your financial advisor, especially if you're a beginner at investing, before you act on any of the ideas here today discussed. This is for education and entertainment. All right, so let's get to it. 3 picks that I would buy today under the top quintile discipline. We're going to start with a company called AppLovin. Let's go to the chart. AppLovin has been on a tear through 2024, up through the software meltdown in the market in October of 2025. For those of you who don't know what that's from, Anthropic, which is a company that will be going public soon, is an AI powerhouse, and they've developed a program where you just tell Anthropic verbally what you want the software to do, and it will create a software program. Wall Street lost its mind, thought every single software company was going to go out of business because of this, and whether you were a good or bad software company, your stock got trashed. AppLovin went down from over 700 to under 400. That's a little bit better than average. The average software stock from October through March went down 72%. This one only went down about 65, and that's because it's a damn good story. For those of you who don't know what AppLovin is, and I didn't know who AppLovin was 6 months ago, AppLovin is the YouTube of video games. If you create a video game and you want to create a following, AppLovin is how you get out there to the gamers. And the reason why we think AI is not going to hurt AppLovin, it's going to help it, is that basically anybody in America can now create a video game if you want to pay Anthropic enough money to write the code for you. Now, just because you create a video game doesn't mean anyone's going to want to play it. But the way you get it out there is you buy ads on AppLovin to go in front of people with pop-up questions. Hey, new great tank game. Would you like to try it for free for 10 minutes? You got to pay AppLovin to get that pop-up. Well, the number of video game creators is estimated to increase tenfold. So that means a lot of companies are going to be paying AppLovin a lot of money to advertise, and it has shown up in AppLovin's numbers. AppLovin's revenues were up 80% year over year last quarter, which is the reason why the stock has recovered so quickly. It ran back up to 620. Now it's pulled back here because it went up too quickly. It had a gap. It came back and filled the gap on the chart. It's pulled back here down to just under 500. If you can get this stock under 500, buy it. My 2-year target is 950, and it's probably low. The more people that decide they want to develop a video game, and the ability to do it is super easy now, the more they're going to have to pay for ads on AppLovin to get you to discover it. AppLovin's also gotten to 2 new businesses where you can have other advertisers advertise on their platform. And AppLovin's almost exclusively young men. A lot of companies out there spend a lot of money in front of young men. You know, it's the typical things you would think of: gummy bears, booze, expensive watches, the Marine Corps, anything that involves thrills or idiotic sports where you get hurt. They're all going to want to advertise on AppLovin too. So we love AppLovin. Get it under 490, and I think you'll be very happy with the ride this stock gives you. The next one is Boeing. Boeing keeps coming out with good news, and the stock keeps going nowhere. That's not going to last. This stock is dying to break out. It hasn't been able to get above 250. It got up there for a couple of days back in February before we had the correction, but and that correction being the Iran war. But there's 3 reasons that you should own this stock. The first is They have a thriving military weapons business that's probably worth at minimum $175, if not $200 a share. So you're getting the number one commercial airline company almost for free. The second is the FAA has lifted all the sales restrictions. So that means Boeing can ramp up all their factories full throttle now. When they had those 2 accidents 3 years ago, and then after they claimed they fixed all the safety problems, they then had 2 doors fly off at mid-flight. The FAA basically made Boeing shut down their 737 factory. That was the plane that had the 2 crashes and the 2 doors fly off. It's the most popular airline in the world, the 737. Boeing has a 4-year backlog on that and a 3-year backlog in general on all their production. This company in a year should be doing 130 to 150 planes a month. Right now they're doing about 60. And the demand for air travel is immense. Air travel, as far as number of airline tickets bought, seats bought, has grown very consistently for 60 years by 8 to 15% a year. And why is that, you might ask? Well, 90% of the human beings on this planet have never been on an airplane. Let me repeat that to you. 90% of the world's population has never been on an airplane. One of the first things people do when they get out of poverty and enter the middle class is get on a plane. Very often their way of getting into the middle class was going to work in another country, and they want to go back home to visit their people. So the future of demand is bright. Their production ramping is bright. Their order backlog is bright. And we've finally got the regulators off their back. Why this is not a $275 stock today, I don't know. But until Wall Street wakes up on what a bargain this is, buy it, buy it, buy it. I've got a 375 target 2 years out, and it wouldn't surprise me if this stock makes it to 600 in less than 5 years. Buy Boeing and buy all you can under 230. The next one is the daddy of AI, Nvidia. Let's go to the chart. Nvidia has been stuck in neutral. Look at this beautiful base. Stock first cracked 175 in August of last year. It got as high as 225 in May and as high as 200 in February. Let's go back further. This is the 5-year chart of Nvidia, one of the most beautiful charts you'll ever see. And this is their earnings history. These guys have beat the numbers every quarter for 12 quarters. And I think the Wall Street crowd is still too low. Their current forecast does not include any sales to China, but we know sales have been going to China. It also doesn't include any sales of the new chips they're rolling out this fall. And they're now getting into 2 other product lines. One is their chips are getting so fast that if you don't have fiber optic wires connecting everything on the motherboard, if you just have regular old electric copper wires, you're slowing the machine down by 30%. So they're making their own glass or fiber connections, and they're also developing their own CPU to go in the middle of 2 GPUs. The GPUs are the chips that are really good with graphics and really good with algorithms, and NVIDIA makes them better than anybody, and they really don't have any competition at that. CPUs is the chip that made Intel famous. CPUs are great for number crunching. NVIDIA is making their own CPUs designed to accelerate the speed of their 2 GPUs around it. That's their new product coming out this fall. They haven't made any forecasts yet for that product. So right now, with those 2 huge markets not being added to the numbers, it's being forecasted that they're going to do $12.75 a share next year and $15 in 2029. I think both are at least $1, if not $2 shy. So where can this stock go? My target on NVIDIA is $445, and I think that's low. 2 years from today, it's currently at just under 210. Very little downside on this company. Let's go to the chart. When I look at a stock, I try to ask myself on the chart, how low could it go and how high could it go? So on the low side, I really doubt this stock could go below 175. tremendous support there. Every time it's gotten that low, there's been plenty of buyers to lift it up. There's a 200-day moving average of 189. Their 200-day moving average is something that most stocks that have no fundamental issues will hold. And the 90-day average is a good place to buy a stock that's on the rise. And it's currently just above the 90-day average. So you got 3 solid technical support levels, and then you got a big base. I learned technical analysis from Alan Shaw, who's considered the grandfather of technical analysis. For those of you old enough to remember Louis Rukeyser, Alan Shaw was Louis Rukeyser's very first guest, and he was also considered one of the first 7 dwarfs that Lou Rukeyser called every week, and he would dress them up in a cartoon dwarf outfit and then give a thumbs up or thumbs down on the market for the next 3 months. Alan Shaw would always lecture us, the longer a base on a stock, the bigger the upside. The thinking on this is, if I bought Nvidia back in August at 180, I'm not selling the stock when it gets to 240. That's only a 25% gain. I didn't buy it for 25%. I'm probably going to wait for 50, if not 100% to sell it. People will sell for 20, 25% profit if it's made quickly. If you got to wait a long time to make those kind of gains, you don't see people selling stuff quickly at 20, 25%. They tend to hold out for 50 to 100. So the longer a stock trades sideways, the more you have a lot of people holding the stock that want to hold it for a long time. And that's what we have here in Nvidia. Now, Nvidia is incredibly cheap here. And I'm sure a lot of people are asking, why? Well, the semiconductor market is cyclical. But I'm going to argue that the cyclical boom in semiconductor stocks usually lasts 2 to 3 years. I think this boom is going to last 5 to 6. There's an enormous shortage of DRAM and storage. And NVIDIA keeps coming out with a new chip every year that gives AI more and more capability, and Anthropic and OpenAI and Gemini keep leveraging the hell out of it to create very, very productive ways to utilize the power. If anything slows down this semiconductor upturn, it will be power, because you need power to run these chips. That's another reason why I think NVIDIA's growth is going to accelerate. The new chip coming out, if you use their fiber optic cables, their CPU, surrounding the 2 GPUs on the motherboard, all from NVIDIA, you cut your power consumption 40%. I'll repeat that, 40%. There's a power shortage out there in data storage land, and that's a huge savings. So NVIDIA reminds me of Cisco. Cisco in the 90s had a monopoly on switching, which is the device that figures out where to send your telephone call based on your number. And no one did it faster than them. And they also had designed their switches to work for the internet. And nobody connected people on the internet faster than Cisco. A lot of companies tried. None of them come close. Cisco went through a period like this. Cisco went up over 450% over 5 years. But there was a 15-month period where the stock was flat and the multiple collapsed from 45 down to 25. And then when it took off, it went up 200% and it went up to a multiple of 69. Right now, NVIDIA's multiple is lower than the S&P 500's. It's 18. I think this could easily be a 30, if not a 40 multiple stock. My target is 35 times the consensus in 2028, which is what gets you to $445. It's rare you can find a company this high quality with this much upside, with this little downside risk. And that's what the top quintile strategy is all about. Let's find the best 5 or 10 stocks on a risk-reward basis that have been beating Wall Street's numbers. And I can't think of another company that's more likely to beat Wall Street's numbers than NVIDIA. They've been doing it for 3 or 4 years straight. They got 2 new products coming out that aren't in the current numbers because the company hasn't given any sales guidance on them. And they're telling people, don't count China because we don't know if we're going to be able to sell to China. Trump and Xi just agreed to let NVIDIA sell to China, but no one increased their numbers. Before Trump told NVIDIA to stop selling to China, they were selling China $3 billion of product a year. So there's definitely upside to their numbers. So that's what we got this time today, folks. We'll see you again Friday. And keep sending me in stocks you want me to comment in for our Wednesday show. Thanks for checking in. Don't forget to give us a favorite That helps us get in front of more people. Thank you.